Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Monday, February 13th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. On today's show, we're going to talk about the data wars between Verizon, T-Mobile, and Sprint. We also have a couple earnings, not too many though. It's a light morning. Teva Pharmaceuticals did report already today, so we'll talk about that. Also, we'll cover what was covered in Barron's over the weekend. We have two guests on with you today. Our first will be at 8:15. She is Anmarie Band, a trader, a technician, an author, and the CEO of thetradingbook.com. And then at 8:35, we're going to have Tommy Lackey. He's the managing partner and portfolio manager at Relativity Capital Advisors. Joel, before we get to the market, tell me anything good happened to you over the weekend?
I saw a new movie.
Again?
We've been on a movie roll. The Comedian with Robert De Niro. I'm a big De Niro fan, so it's a comedy. I wanted to see it. I'll give it a B- rating, but Lisa definitely gave it a Z rating. You know why she gave it a Z rating?
What is a Z rating?
What is a Z rating?
I had to wake her up for the end of the movie.
That's good.
That's actually pretty good.
And S&Ps are up. I can't give you any resistance because there isn't any. Looking at the downside, 23.1275. That was your close. That's your all-time closing high. Absolutely no downside till we take that out. Crude backing off the 54 level, down 41 cents at 53.45. Gold and silver in the red. Dennis, I spoke to you over the weekend, and you were doing a little bit of Mr. Mom.
Holy cow. Solo parenting here. My wife was away for a couple days, left me Friday night, Saturday night, and Saturday just solo parenting. I'm not very good at it. Anyway, so I'll just give you some highlights here. You know, the Coles notes is I stabbed myself in the eye. And I got stuck in the McDonald's play land slide thing, or in the tubes up there. Not good. Let me give you the details on just the McDonald's story. So, anyways, I take Spencer to McDonald's after accidentally stabbing myself in the eye. My eye's okay, but it wasn't fun. I won't even tell you about that. Just stupidity on my part. But McDonald's. So going to McDonald's, order Spencer a Happy Meal, and just background. Spencer's my 2-year-old son, so you can imagine the twos. And he's one of those typical boys that just likes to terrorize everything. Get him a Happy Meal, and he likes to be a good helper. So I get a Happy Meal, and me, I'm all about the value menu. So I get a couple of the McDoubles there, and I also get a junior chicken. I like the junior chicken. So anyway, so I'm getting Spencer's stuff out, and I look over at Spencer. And he's got my junior chicken. And he's so helpful. He goes, "Here, Daddy." He's got it in his hand. Hands me the junior chicken. Chicken plops on the floor. So my chicken is now on the floor. I look at it, I was like, yeah, not eating the chicken off the ground at McDonald's. So anyway, so we're eating along. And then, I'm looking at my McChicken. I was like, well, I've got a junior chicken there with bread, mayo, and lettuce. I was like, what the hell? So I eat the junior chicken with bread, mayo, and lettuce, or mayo and lettuce, and no chicken in it. Horrible. Anyways,
You should go up and say, "Hey."
I thought about that. I thought
that.
I was going back up. But then how do you watch Spencer? It's the 2-year-old, question always. If I go up there, I've got all my food here. Who's watching Spencer? It's just me and him. If we have Mom there, then yeah, I can go up there and complain. But here I would have to, leave my food. Now I've got to pick up Spencer. I've got to go up there because Spencer's going to terrorize everything if I leave him there for 30 seconds to go up there and complain. And really, I guess it was my fault. I should have been watching Spencer closely. He grabbed all my chicken sandwich and boom, it plops on the floor. So anyways, so then we decided to go to the play center. You know how they have those play lands at McDonald's, and it's got the tubes that y'all climb up there, and you go down, and there's a big slide at the top. So Spencer's too. He starts climbing the tubes. He wants me to go up with him. I'm like, I don't want to climb these tubes. So, he's complaining. I'm like, okay, fine. So I get in the tubes. I start getting in there. I'm like claustrophobic in there. Like I barely fit. They're meant for like 5, 10-year-olds. They're not meant for a 40-year-old that's overweight. So I'm trying to climb these tubes up, hoping I don't get stuck. Spencer's climbing ahead of me. Sure enough, we get to the top after climbing I don't know how many tubes to get to the top. And it's all closed, so you can't even see outside the things. And so that's why you really get claustrophobic. Get to the top. Spencer just runs ahead of me and slides down the slide. So I'm like, come on. So I can't, I'm all enclosed here. I can't slide down the slide because I can't see if he's at the bottom, and I'm going to, hit him if I go down the slide. So I'm like, I can't go down the slide. So then I'm like, well, now I don't even know my kid's at the bottom. I'm at the top. I can't see my kid. He's 2 years old. I'm like, what do I do? So anyway, so I climb down the tubes as quickly as I can. It felt like forever. It was probably only 30 seconds. Get to the bottom, and Spencer's laughing at me. I'm all sweaty from being in the tubes. I was like, no. And then Spencer wants to go again. I was like, no, we're not going up those tubes again. So moral of the story, our bottom line is over the weekend, I get stabbed in the eye. I ate a McChicken without the chicken, and then I got stuck in the McDonald's plate.
And Dennis,
it was a rough weekend.
And you have one on the way, so you're soon going to be out.
You're going to be
outnumbered. All right,
I'm totally outnumbered. I'm done. I'm in trouble.
All right, let's get to one good earnings report here. Teva Pharmaceuticals, a beat-up stock. Spencer, what are the numbers for Teva?
Q4 EPS $1.38 versus $1.35. Revenue $6.49 billion versus $6.25. So a beat on both. They see their fiscal year 2017 EPS at $4.90 to $5.30. $4.83 was the estimate, so that's a good number. Revenue $23.8 billion to $24.5 billion. The estimate was 23.7. So that's a good number too. So they beat on everything.
Beating on everything, and that's good news for the stock. But you know what? This is classified in the whole Gilead same type of deal where it's so hated, you wonder if they don't eventually find some reason to sell it. We've got a nice pop at Teva. You can see on the pre-market chart, but it's already starting to give some back. So I'm not chasing Teva here simply because this is one of those, it's classic Gilead trade where it doesn't matter if you report everything good. They usually find a reason to sell it. So it's popping 4% here. I'm going to make a call here. I wouldn't be surprised if this thing goes red just because it's Teva.
Ooh, thinking of
That's
going.
the Teva rule. Teva Gilead
All right,
rule.
it's only a buck
value
away.
Hated. We'll see. It was a good quarter. I like, long term here. I think there's some value in Teva. But we know short term, this thing is just, sentiment's not with it. And that, if we go to my algorithm, that can be more important than the earnings itself.
I really like this $34 area is the key to continue upside. The pre-market high, $34.15. Going to the daily charts, you're filling a gap also in that area for the Israeli pharmaceutical company. So let's see. If you could get up back, take out that pre-market and hold 34. I like 34 and a half, but I think there's a lot of people probably screaming uncle here. Short-term trade trying to get out at 34. Coming back on the downside, you have a great level to look at, the double bottom from the last two sessions, as Dennis mentioned. So if you are trying this thing on the hop, you think it's a real good buy, you're going to buy it off this report. You surely don't want to see it take out 31.90 to 31.92. And then if you go, Dennis, actually, there's a quad bottom here at 32. 32.08.
Big level.
Yeah,
I don't know if we're going to get down there. It's a pretty good report. It's trading up actively, already 600,000 shares.
So we'll see.
I just feel like overhead supply is going to make this thing leak. It's already leaked 10 cents when we started talking about that. But let's look at the Gilead chart. For a game in the chat there, he wanted to talk about GILD. And I was looking at this, I'm obviously invested in it long term, but just from a trade perspective, you like these little setups. Here's a little double bottom here from the last couple of days, 65.38 and then 65.43. And we actually closed green. So Gilead is trading up here. So a little bit of life here for Gilead. So I'd say, if you're trying to call a bottom here, at least you've got a tradable bottom now with that double bottom and the low at 65.43.
I don't know who was trying that off the open on Friday, but might have been a little bit too tight with the parameters. Because if you would have bought it off the open, you used the stop as the close as a stop, you would have got kicked out. If you're giving yourself a little bit more room, you would have been in the trade as it didn't take that out. But important level there if you're trying to swing trade or looking at some options. You know where your out is, and that would be, I'd give it a little bit more room, even 65 and change. Big level on the upside, 66, 78, 79. Those are your highs from the last two sessions.
While we're talking these biotech chart setups, I was looking at a few more charts just over the weekend here. Let's look at Sarepta. This looks like it could be a breakdown, guys. And I am still long this my investment portfolio. I sold half of my stock up there at 36. Wish I would have sold it all. Now the stock is down here at 27. Just watch you don't get, these fake breakdowns can sometimes become fake downs. But you had a pile of consolidation here for a number of days with lows just in the whole 28.50, 28.27, 28.40. So call it all $28. And we closed below that. So if you're looking at this over the weekend, people might be nervous on this one. So just looking at this for a potential breakdown here, SRPT.
Yeah, you can see the lows of the move here. I'm kicking myself on this one a little bit. Because when they had this run up here, this
I'm
is
kicking
back in
myself big time. I didn't sell all my
well,
stock.
I'm going back before this. When they had this run up here, up to 63.73, that incredible one-day run, and that was off what the approval was it Etta Pluralson? Is that the big drug
Yeah,
that they had?
yeah,
I just
yeah.
kept on thinking to myself, how many people? I mean, it's great that it was approved, and we had Jen on, right, whose sons were affected by it. But I'm like, how many people are affected by this drug? By the disease. It's what, Duchenne muscular dystrophy? And I kept on thinking, it depends. I mean, you're not curing cancer here, you're curing something. It's great and it's got approved, but how many people out there really have
That's the
it?
problem. Yeah,
And if you would
that's
have
a
got,
great point.
yeah, I mean, I had no idea. I mean, I would have shorted it at 40, got stopped out at 50, shorted at 50, get stopped out at 60. I mean, the kind of things. But once it started to come down, but here it's back at the level. You're still as a trade. You took off half there, so let's see. I'd say another day or two. You really want to see it get away from this area.
Jumping over here just to Barron's, and we got about 3 minutes here, so we'll try to get all the Barron stuff in before Anne-Marie comes on 8:15. But the big header or story that you were talking is Macy's and Barron's, and Macy's is getting a lift. I'm kicking myself on this one too. I think I was even saying it on the show, but got the big lift on rumors and pulled back almost to the place where it came from. You know how I like that setup when stock's at 30, runs to 34 on rumors, comes back all the way to 31. It's giving you a lower risk play, and the retailers are starting to turn around a little bit. Like we talked about last week, Kohl's and JWN, they started showing a little bit of life. I wouldn't say a turnaround, I guess, but a little bit of life. And Macy's is getting some nice positive Barron's coverage here now over the weekend.
Yeah, and well, I've been thinking about this one too, and I talked to you about it after the gap down, and you kind of it's not like the J.P. Morgan trade I talked you out of here, but I looked at it, and the thing is that they're really taking steps out of all these retailers that are getting killed. They are taking steps to move more towards the online, and the online revenues are growing. They're doing things. I mean, I guess if you take their property value, which I'm no expert in valuing, it's supposed to be worth $21 billion. Read the article. It's a good article. I don't know if I could chase it up here on this kind of move, but a lot of different combinations. Nice tech setup. Pre-market high 33. I mean, I'm not a big one to chase stocks when they're mentioned, as possible takeover, but you're right at Friday's high, right around 33. So see if you can get through that. Spencer, you got anything you want to add?
I was just going to add that they said Macy's has 50% upside with the sale.
Yeah.
Wow. They're like that real estate. So I think that's what you're banking on. If Macy's does come through, you're banking on the real estate. Another minute, Joel. Quick Barron's coverage. What else was in there?
Oh, there's a lot of different stuff in there.
We may not be able to do it in a minute. Should we come back to Barron's?
I would. You want to come back to Barron's?
Yeah, let's come back to Barron's. It's age 14. I mean, they covered IGT, International Game Technology, and they covered Abbott. So we'll get to that after Anmarie. But it's age 14 now, so we're going to take our first break of the day. What was that, Joel?
Steve Sears is talking about a Twitter strangle, but we'll go into that
later.
Later.
Okay.
We'll go into that.
All right, well, let's get right back with Anmarie Band. She's a trader, technician, author, and the CEO of thetradingbook.com.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we have Anmarie Band on the line. She's a trader, market technician, and an author of the thetradingbook.com. Anmarie, what is your evaluation of your second winter here in Detroit?
You know what? It was pretty mild. We
It's
weren't snowed in tremendously. We had a little bit of a cold, but, overall not too bad. I've spent a lot of time in Naples, Florida, so that might have tempered how I felt about this winter particularly, but it's been a good one.
And it's not over yet, Anne-Marie. That's the only thing I'm going to
I
add.
know.
Okay. Uh, First, let's get your thought on this incredible market. I don't think we've had you on since the election. Big trading activity the night of the election. The Trump rally, I mean, it looks like there's really no top in sight here. Looking at it from your perspective, do you have any Fibonacci extensions? Do you have any targets? Do you have any idea where this market might find some resistance?
Well, all I have been doing is watching for new areas of support to hold and taking the long from there and really not trying to call any kind of top, because the second we see, and Fibonacci's have worked really fairly well. There's an expansion in the ES that should take us into 2320. That sort of matches an SPX area around 2320. But all that tells me is, hey, listen, you better not buy the breakout today. What you ought to do is watch for a pullback and see the higher lows. Don't anticipate that it comes back to old resistance that became new support. Anticipate a new area of support coming in. And I have to tell you, my friends have been the trend lines. And if I can draw a trend line connecting a couple of wicks on the bottom and a couple of bodies that hold fairly steady on the bottom, it's taken the anxiety out of, hey, listen, am I accumulating in some kind of topping space because I'm being exceptionally patient, waiting for things to fade, certainly on the swing, waiting for them to fade just a bit into new regions of congestion that seem to be building up. Right now, though, I think today looks like a place where we could start seeing a little bit of a fade that might give us a good pullback area to take the long. And so the element of patience is really going to be key right here in my mind. So I'm looking for it to come into a brand new higher low, watching for big formations, things like NVIDIA and Honeywell and CSX that are tracking and doing really fairly well in several different industries. Just watch them at these frothy top levels. Let them come in a little bit before you lay any more anxiety on your plate buying this high, because it does make us a little nervous, or at least it makes me a little nervous, buying at these areas that seem very elevated, but outside of maybe just a little bit less volume, they're not showing us anything definitive that says, we're done.
All right, Spencer, cancel the rest of the show. We're going to keep Anne-Marie on, and she's going to teach me. She's going to teach me how to buy on support here instead of selling it, looking for a major breakdown. So I want to go with time frames here. We're going to go with the stock that everyone loves to follow here, NVIDIA. Hit a new all-time high before the report, failed just above it. So bears like me are going to say, double top, this thing's going $100. Two red candles in a row. Give us the time frame that you're looking at and how, what you're looking for as far as the setup. Because if you go off this trend line from that 99 and change low, it kind of broke that trend line. So, give us a potential setup. Maybe not today, 2 days or 3 days. And one the hottest stock in 2016, NVIDIA.
All right. Here's how I look at this one, because this one's pretty much a beast, right? But it's not a beast only because it's holding its technical formations. fundamentally, it's providing a service that's going to expand with its own economies of scale outside of itself, right? So as everything around it gets bigger, more people are going to be looking at NVIDIA, wanting to get involved, and they are looking at a double top on the daily. You can see that. So you know it's not a region where you go, yeah, you know what, it's got a little bit of a pullback. I'm going to take the trade. But I will tell you this, around 113.50, 114, the chart ought to hold that region ultimately. So here's what you're looking for. How can you tell what a pullback looks like? So one of my favorite things to do, talking about that trend line, is going to the date 12/12, and you see a wick sitting down there, and then there's another wick that's sitting on 118. If you join those two wicks together and you expand that chart, you're going to see a region that's going to bring us into about 108, 110, somewhere around there. And then we've got super heavy congestion at 106. So what do I have? This thing I know is a monster. So for me, I'm thinking to myself, where's the best value event that if it comes into that space, I'm going to go, wow, I feel really fortunate to have acquired the chart at that region. And that number is going to be about 106. So if I'm looking at the chart and I go, hey, listen, I see 106 there as a fairly nice congestion area, I'm going to have a buy order sitting around there. Now it's sitting at 113.60. So am I going to have to wait on that? You betcha. Is it possible that it never comes back and gets me? Also very likely. But for me, I'm going to say to this chart, listen, I see the rotation. I see the double top. I know that technicians are going to look for a failed bounce higher and potentially take that resistance area as a short. And so the failed bounce higher is going to be at about 115.80. If it comes into 115.80 and starts looking weak, intraday, hourly formations start looking really weak, they're going to try and short it again, and it's going to bring it down into that 108-ish area. So if it starts chopping around at 108, which it did for about 5 days before it took off again, I'm going to guess it's going to come there. And if it comes there and somebody really tries to punch it down, it's going to come into my 106 and pick me up. And so if it comes in at 106 and holds, I'm going to look at that congestion at 108 again. I'm going to see how it holds, and I'm going to buy it there, knowing that people feel pretty comfortable into that region of 113 to 114, maybe even 116, where they started selling off in the first place. So for me, I know a lot of people say, hey, listen, when it breaks out, you watch for the retest, you hold the breakout, you go long. Or if it fails to break down, then you go short. But for me as a trader, I look at the overall trend and I say, where is the least risk? And it's going to be at the support zones where everybody says, man, I can't wait to buy that. That looks fantastic. And it's the one that's most patient. Do I have the space where I go, listen, there's a possibility that it doesn't come and get me? Yeah, it is there. But I'm willing to give it up because I'm holding the line on here's where I see value. And if I wait for this and I get filled, the likelihood that I'll end up underwater in this is very, very low. And so I'm willing to wait on it and let it go by me if it doesn't come.
Hey, Anmarie, Dennis Dick here. Just wanted to get your thoughts on Apple, too, because Apple has been on an incredible run. We had the gap and go from the earnings where we were up 6 days in a row. We had one little red candle here on Friday on the 7th day, but actually still made a new high on the day. What's your technical look here on Apple?
You know what? Apple looks great, and I think their earnings gave people this feeling that, hey, the pipeline is still going to be good. There's still going to be ways for the chart to advance, and people have been waiting a long time for it to hold up over these 120s. And, it barely did so before the earnings, so it didn't really give anybody comfort to go, hey, listen, that was really great. I'm going to go in long before earnings. And so this gap up has a bunch of people chasing. And so my thought is this: whenever I look at a gap up, what I will measure is the length of the candlestick of that day that it trades after earnings. And that one has a bottom with no wick that opens at like 127 and goes all the way into 130.49. I love drawing Fibonacci's on those. And if you do, you'll see that Friday's high came right into the 1618 area and then began to back down. So my thought is there are going to be two groups of traders. There's going to be the one that goes, oh my gosh, as soon as it pulls back a little bit, I'm going to get involved. And that little bit is going to be, hey, listen, can I get into 131.50? Can I get into 131.80? I'm going to try and take it long. The other guy is going to say, hey, I'm going to wait to see if I can come back and retest my 130.49 that I got on the high of the breakout. That's going to give me an old resistance becoming new support that gets retested, and that's going to give me that space. So my thought is, at the first pass, the 130.50-ish area is going to be a relative buy zone with about a stop that's maybe $1.50 wide. If it comes back up and gives us the double top that we see NVIDIA looking at right now, the same way that looks, that's going to say, hey, listen, they're going to start taking a little profit that people had that held before earnings. They're going to say, hey, listen, I'm looking at a topping formation, going to take some profit. That's going to be the reason to watch to see for that Apple fade. But at the first pass, I'm guessing that there are going to be a lot of buyers at that even number near 130, 130.50, because momentum is monstrous. Even though we do not have the volume that we would like to see, this cresting higher volume, I still believe that this chart has got some action on it on the fade. If you buy it now and it fades all the way down to the open of the gap, that's going to be a $5 move against you, which means you'd have to have a test of 137 for it to be a 1-to-1 formation that's going to give you anything that looks good. So for me, like, you know what? This is great, but I'm going to wait. And again, if you take that trend line event and you draw, just connect a couple of wicks, you'll see if you draw just the first two wicks for 2, 2, and 2, 3, just the bottom of those wicks, and draw them up, you'll see it collide right down into 130.50, probably tomorrow or Wednesday.
Anmarie,
yeah?
we're up against the clock here, and I
No
just
problem.
want one more. That was the easy one,
Yeah.
but Cajun One wants to know if X is breaking out here. So give us your quick thoughts on perhaps the best of the Trump stock, X, which is trading up today.
Okay, for U.S. Steel, no, it is not breaking out. It could break, but it's going to come back and retest the region about 37.20.
Wow.
Going to have a $2 stop underneath that. If we're to X, right? U.S. Steel?
Yeah, great. Incredible. Yeah. Incredible. What, right off the top of your head. Anmarie Band, market technician, author, and CEO of thetradingbook.com. We'll be talking to you real soon again, Anmarie. Thank you.
Thanks for having me. See you later. Bye-bye.
All right, S&P's making a new high. 1875 is a high. 18 and a quarter. Spencer, you got some news for us?
Yeah, ZLTQ, Zeltic, is going to be bought by Allergan. This is this morning for $2.47 billion, or $56.50 per share. Shares were halted, but they just resumed at 8:30 just now. So watch out for that.
What's the takeout price? $56.50?
Yep.
What did it trade up to, Joel?
Just traded up to 56.
Okay, so
56.05.
50 cents. So these things
Yeah.
get up near those prices, and they seem to be, a little, a lot of times they pull back a buck or two just because I don't think there's much risk in this one, so I don't think it's gonna be much off the takeout price. But if it trade up to that 56.50 area, I could try for a short maybe.
No one knew about this though at all. This was like very well kept.
You're looking at the chart on Friday.
Yeah,
Where,
Friday.
where it goes from
Friday. Look
47
at
to 52
Tuesday.
bucks, but no one knew about it.
No one knew about this. Is one of the best kept streak. Oh, look at that. No one knew on Wednesday, Dennis. No, no, no. I didn't get a memo, so it couldn't have been out
Straight
there.
up days.
Oh gosh.
Rumored? Was it rumored? Maybe it was rumored.
Okay, maybe.
Spencer was rumored.
Not that
Did
I
you see
saw.
anything
I didn't know.
about rumors or-
I didn't know about it.
Hey, Dennis, one stock here. I'm pretty.
Insider. It's hard to fight those insiders. I'll tell you, I lose a lot of money in insider trading. I need to crack down on that stuff more.
And one thing I'm a little bit upset with you about here is Allergan.
I know I shouldn't have sold it. I
What?
shouldn't. You said not to sell it too, and I was looking for any excuse to sell that thing. I was up 35% a month and a half, and I was itching to sell it, and I shouldn't have sold it, but I felt it was too much too fast. Plus, it's a biotech stock, and you know how I feel about the biotechs are all weak, so it seems like if they say anything bad. But anyways, Allergan's been an incredible mover here.
And it's not even really getting hit. I don't know how much this takes out of their tills to do this.
It's like your
deal.
Honey Badger pharmaceutical company. All the
Yeah.
other pharmas get beat up, not Allergan.
I
Honey
told-
Badger stock.
I think I told you to move your stop to 2.25. Is what the
I should have
last-
moved it up. I should have been playing with stops and not actually just selling it out. I was looking for any excuse to sell, and I pulled back a little bit, and I was like, I should take the profits and run. I did. I shouldn't have.
Okay, let's. We got 3 more minutes here.
Quick
before-
balance here because there's a couple interesting ones here. Exxon Mobil, 446,000 to buy in XOM. That's out of the blue here. If you look, actually, stock was just starting. Well, it's starting to just trade a little bit green here, so that's going to help a bit. But we've got oil here actually trade down slightly too, so it's always an interesting setup when you get a big oil conglomerate like that with a big buy imbalance on a day that oil's trading in the red. ExxonMobil 446,000 to buy. Also, we talked about Macy's already. Obviously, a lot of people following Barron's 197,000 shares to buy in Macy's here this morning too. So 2 stocks that look like they could be strong off the open. Going the other way, we got Travelers Group, TRV, 83,000 to sell. We also have Verizon, which we've got to talk about here, and I don't know if we're going to get to it before Tommy or not, but they've done this. What are they doing? Unlimited data?
I'll rant about this after Tommy.
Okay, we're going to get into this after, but anyways, Verizon and AT&T are both getting hit here this morning, and so is Sprint, and so is T-Mobile because of Verizon. Verizon 40,000 shares to sell. House of Mouse Disney 65,000 to sell on Disney. Couple quiet days of consolidation here after the earnings on Disney. We know that resistance is up there at 112. Support though is starting to get a little bit dicey there for Disney as it just keeps hanging out here near the lows.
For Disney, we talk about where we see large institutional activity, and 110 was a level. It took a while to crack that. We've seen 111, 112 a few times, but for me, I'm still looking for this thing to get back over 110 for the next leg up on a closing basis, and not to give a contrarian view to Anmarie, but 133 may be a formidable level here. In Apple, you hit 32.94 on Friday. That is the area of 2 highs from July 20th and July 21st back in 2015. So longer it takes Apple to get over 133 here, I may be taking a look at it on the short side. All right, 8:34. It's time to bring in our last guest of the day, and a gentleman we haven't spoken to in a while here, Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Right back with Tommy.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We are joined on the line by Tommy Lackey, managing partner, portfolio manager at Relativity Capital Advisors. Tommy, we've missed you for a couple weeks here. How you feeling?
Much better. It was a very interesting time because I'm a person who doesn't get sick often, and I'm not allergic to anything I know of until now. And I had an extremely bad reaction to a antibiotic that I was given. So it was a pretty interesting situation. I'm glad to be behind me.
All right. Well, we're glad you're back. Glad you're healthy. Now you're down south, right? Where are you based out of?
Oh yeah, I'm outside of Atlanta in a small lake community, about an hour outside of Atlanta.
Okay, Tommy, we got to ask you then, and I don't want to bring up any bad memories. Were any people jumping in that lake after the Super Bowl?
Yeah, it was a terrible thing, but I'm a lifelong fan. I've been here my whole life, so I'm still behind them. And we hated to see it, and of course, for the Patriots, made it even worse. But it was, they played a great season, and I think they got some good stuff. So no, not really. I mean, we're down here, we're not as much fair weather fans, so we stick with our teams.
Tommy, let's jump over to the stock market here. You've got your scanners. They're running here, and you got your nitrous scan up here this morning. And what are you seeing in the nitrous scan? I see you sent us a few stocks over here. Give us a couple stocks that you're seeing in the nitrous scan that you like here. Let's maybe start with FMI.
Yeah, FMI was the first one, which I thought was interesting. It was a big move, and it was on volume, but I did mention they're not to buy it right here. But it's one you definitely want to keep an eye on because this doesn't look like a flailing move. So this is one that even with the tail we had Friday, if it resets up here around these highs on a weekly basis, it's just now trying to move out of a monster base. So again, the rejection Friday should be paid attention to, but if you look at the volume footprint of this thing over the last month and a half, it's pretty awesome.
Here's a gold stock that I don't really follow, Seabridge Gold SA. It's been on a run here with gold. It broke out a little bit on Friday, even trading up to 11.20 there and then closing at 11.10. Thoughts on SA?
Yeah, same thing when I looked at this one. I've looked at a lot of different gold names. A lot of them performing well, and a lot of them are getting pretty extended. This one looks like it just recently broke out last week out of a inverse head and shoulders that goes down to the 750 area, up to about 10.50, so that's $3 on 10.50, so that targets about the 13.50 range on this one. Now it still has to get through the 200 SMA around 11.50, but again, it looks like it's starting to really gain a little steam.
SINA, you're looking at a flag in this one.
Yeah, this is one that ran and then it's flagging sideways now. And little tight flags like this can be real productive. Number one, this one's above all the important moving averages at this point. So, you go back down below 72 and you've pretty much gone back below some of those moving averages. So that could be a good place to trade against. And then looking at it to come out of this flag and extend up at least to get through the gap, which comes in at 76.99, and then from there, I think it could even climb that potential candle. So maybe the 80 range is where I'd be looking at this one to get stopped longer term.
This one looks interesting. OSIR. It's just been consolidating here, had the pop to 6 and the pullback, and now it's trying to take it out here again. Kind of looks itching to go. OSIR. Thoughts, Tommy?
Yeah, and it does, and it's in the area it's in, though. It's in biotech. So this is one of those that you've got to stay tight with, even if you do. But I think that if you're willing to be a little bit patient with this guy right here, you could play it against that consolidation around 545 area, a move back below that. That's a 10% move down. So for short-term traders, it's not a great play. But at a $6 stock, if this one does break, it could easily get up to that 7.5 range. And if it gets above that, it's got room to 10.
Boyd Gaming, BYD stock had a little red candle on Friday, peeling back a bit, but still hanging out near the highs. BYD.
Yeah, it's just one of the ones that doesn't get talked about as much in gaming. With the Wynn and the Las Vegas fans and places like that. This one just hasn't really been talked about, but it looks like the chart's been shaping up pretty well. Now, I know earnings are this week. I think they might even be tonight. Not sure, but I know they're this week. So we want to pay attention to that. But, again, it just doesn't seem to be, look at this versus Wynn. Wynn's in a big sideways consolidation too, but it's not as near the highs, and it's also more, kind of stuck in the middle as this one's starting to move out. So it might just be one of those underfollowed guys that decides to perk up a little bit.
Tommy, before we move on to your other scans, I got to ask you about Goodyear Tire GT from my buddy Ross, who I swim with and keeps me in line at the sports club. Works at Goodyear Tire. What do you think? A breakout over 34 here? What would be your projection on the upside?
Yeah, well, and that's the thing is if you go back and you look at this weekly chart, a breakout over that has plenty of room. Up to 35 takes out the highs, and I don't know if those are actually all-time highs, but they're for a long-time highs. I'll put it that way. No, it's not quite all-time. All-time's up around 36-ish. So we're getting right up there in that area, and if you look at this on even a monthly chart, it's a huge cup and handle type chart, and, Goodyear does a lot in a lot of different industries. Both petroleum-based, rubber-based, and a lot of industrial-based products. So it's something that I think in this environment could definitely perform well.
And what if I told you the all-time high in Goodyear Tire was 76.75 back in early 98 there? So quite a room.
Awesome. We got plenty of room to go.
Oh, yeah. Get in there now and get out at 76.74 just so you don't miss the top. Moving on to something I'm a little bit more familiar with here on your short list, the Meltdown Filter. You have a couple different stocks on there. Before you get to your favorites or whatever, let's talk about the Bear Flag and the MSI.
Yeah, MSI is one that it's again, a lot of these right now, especially with the strength of the markets we have, you got to kind of play a look both ways or be tight. But MSI is basically right on the 150 SMA. It's bounced off its twice, and it's built this little bear flag after that really rough day down. Now, it's one of those plays here that the way it's setting up, it's also on a long-term weekly trend line that it's sitting on here as well. So this could be an area that it bounces a little bit, but I would be willing to bet a bounce up to 80 would probably get rejected, or at least that could be a good place to trade against. But it's one of those scenarios to where if you want to be on the short side, you probably do need to get below that big candle close, a little bit below here from last Tuesday. But if you want to wait for the bounce, you could play it against 80 at any time.
Yeah, here's an interesting one, and really not a typical Tommy Lackey chart. XYL, Xylem, if I'm pronouncing that, had a pop off the low. Was this just a dead cat bounce?
Well, and that's the thing is the way it's shaping up and all that, it very likely could be, and it's still on this ledge. Again, kind of one of the look both way plays, but this one I still kind of lean towards the fact that this move off the lows is not showing too much excitement, and if it can't get over the that large candle there or the set of MA bands or moving averages around 49-ish, then I think, again, it's a decent one to trade against the 49.50 area.
All right, better setup perhaps here on the ledge, BOH. What's your technical setup in that issue?
Yeah, this one has been bouncing here a little bit, and it's a little bit below that particular ledge. The ledge was probably closer to 80, 86-ish area. It came down, and it's just been kind of moving sideways here for a little while. But there's just no life in it, it doesn't seem. It seems like every time it pops up, it gets rejected right around this area. So I think at this one, you look for maybe a close below or a move below the 2-2 candle, which would be a move below 82.75, and then this one could have some continuation.
All right, we'll just do one here. Matt, MET, what do you think about this one? You're saying to look both ways on this one. Explain your setup.
Yeah, with Met, the fact that it pulled back in a scenario to where insurance has been doing pretty well. It got hit on either earnings or some news or something of that sort, and then it's just kind of consolidating and is now moving back into that gap. So I see this one now back above the 80 EMA. If it can get back above the 21 EMA, which is above Friday's high, then this one I think continues higher. But it's one of those areas to where a lot of people will look at this as a classic bear flag, so you can certainly wait for a break back below around 51 if you were more inclined to be short. But because of the way insurance has been performing and financials in general, I lean more to this one recovering at the moment.
All right, Judy Printing Gallery wants your thoughts on GPOR.
Okay, not one I've looked at in quite a while. Again, it's trying to bottom. It could be going through a failed breakdown right here, but it hasn't really proved that yet. It has to get up, I'd say, over around 2110 and hold over that. Again, if you're an intraday trader, you want it to hold over for maybe half an hour, an hour. If you're a daily, then you might wait till the close if you're looking for a longer move. But this one is sitting right there on that ledge, and there's really not a lot here that says it is turned yet. It just might want to try.
Tommy, a couple ones coming from your buddy Rob Hood. WERN and XPO. Start with WERN.
I'm sure they're good because Rob always brings good quality. I enjoy Rob's input. I mean, look at the weekly. Don't even worry about the daily yet. Look right back there at the weekly, and that extends all the way back into early 2015 area. That if it gets above this 29 area, it can definitely start moving there. And then the daily has just been straight sideways. There's nothing here that hasn't held. It played with the moving averages for a while, but now it's back above them. And it's just got these two big black candles that have turned down, but it looks like it may want to start eating them. And I love it when it starts eating those candles because everybody's going to look for that to be another top, but oftentimes the third time it's not.
And then last one, XPO.
XPO, good name. It's just now started to come back out. I'm pulling up the chart back here. I remember this one. Yeah, it's starting to come back out of a nice, just long sideways consolidation after moving higher. It's right below the highs, and this is one of those good potential internal breakouts where you get this small consolidation that gets up the energy, breaks out from there, and that sends it running through the other highs, the ultimate highs. And this looks like it could be a good setup for that.
Okay, I lied. One last one here. Chat is throwing a match, and we can't. The
chat, you got to come out earlier.
Tracy C wants to know about TDG, Transdime Group. This chart's really interesting. I want to know what your thoughts are on this one, because this one is very interesting.
Yeah, fine with me. I'll do as many as y'all like.
TDG.
Basically, we're right back in the middle of that triangle that broke down. It's one of those areas where it's moved far and fast to here. So it's kind of like the first one we talked about is that you don't want to rule it out yet, but you can't really buy it right here unless it gets on over about 258, 257, 758 area. Because being right at the apex of this triangle, you got a lot of volume at price right there that could stick it here for a bit, but a nice flag setup or something like that could give you something to trade against. Or if you're an options player, you could do a straddle or a strangle and play both sides.
Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Glad you're back on the mend, Tommy, and we're going to pencil you in for next Monday.
Thanks, guys. Always fun. Y'all have a great week.
Thanks, Tommy.
Well, he took that Atlanta loss pretty well, and I think in next segment, you guys got to get the symbols in there earlier, and we will try to get you guys.
Those symbols are still
they're still coming, but he's good. I mean, he
coming.
looks at it, and the thing about his ability, these aren't. I mean, he goes to his scanner and he has the things, but then he can pull up something individual, and we talk about that too. What jumps out at you? What, like, to me, I look at this TDG. I say, yeah, nice run here, but right away I'll look at this double top, and I'll say, oh, wow, that's a quadruple top. So I'll be looking immediately at that area to see if we get a follow through in it. And that area in TDG, for you people that are watching on your charts at home, that exact area comes in at the 255 and change level. Okay. All right, Dennis, I lost track of where we were at here. What are we going to cover?
We got to jump back over. We haven't talked about the Verizon AT&T. We hinted to it earlier there. So, Spencer, enlighten us here. What did Verizon do to knock their stock down over 1% here this morning?
They are the latest company to to change their mind and go back to offering unlimited data plans for subscribers. And this is, of course, following the trend being set currently by T-Mobile and Sprint. Verizon was one of the last holdovers they had for the past 4 years or so. Made it they'd gotten rid of unlimited data, and they'd made it incredibly difficult to keep your unlimited data plan if you were grandfathered in, because this was about 2012, 2013, all the phone companies started getting rid of their unlimited data plans. In the past few years, they've obviously gotten better at handling the data loads and streaming, and so now they're all changing their mind. They're all going back to unlimited data, which is very irritating for me because I was one of the people that they forced off of their unlimited data plan. And now now they're changing their mind again. I think this. My first impression is I think this is just a reaction to people not thinking that management has any idea what they're doing. But that's what I think, because I think they have no idea what they're doing. But I'm just annoyed maybe that they're changing their mind after forcing me off of their unlimited data plan.
Joel, you were saying price war.
Yeah, price war, and also just indecision, on the company's part. That's why I think that the traders are hitting this. You go one way, you go back. Also they're in the midst of a transition with Yahoo. I'm just going to give you a level here, and it's very simple here. I'm not going to get fancy at all. Pre-market low comes into 48.15. You've had a couple lows under 48, 47.80, 47.94, another low of 48.10, another low of 47.90. So there's your big area. Longer it takes to get there, I see maybe a little bit of a rebound, but critical support here in Verizon at the $48 level is illustrated by the daily charts. AT&T has got hit as well on this news. Let's take a look at the pre-market trading and AT&T 40.76 low. This has gotten a little bit of a bounce here. When you look at the lows at AT&T, you have one under 41, and that was, what was that low? 40.82. So you got some good levels here if you're looking to cover a short or try a potential long in Verizon and AT&T.
Also, T-Mobile is trading down on this. TMUS is trading down almost 1% here in the pre-market, actually over 1% now at 61.69. We've got Sprint trade down 2.5% on this. So I don't know if this could just be a one-day thing or not. This could be a little bit more like people come in here and they always see value in these stocks like the Verizons and the AT&Ts. But if they do, if they're cutting prices here and if there is potential, no. So they're hitting them all, and they're hitting Sprint and T-Mobile pretty hard here this morning as well.
And, when's Amazon going to come out with some, really cheap, they have the phones or whatever. But I don't know. I just think they're going to get cheaper and cheaper. There's a lot of competition in this arena.
Jumping over here just to a couple other stocks, so moving away from that, back to the imbalances here because there is some interesting ones. There's some big ones this morning. Pfizer 86,000 to buy, General Electric 142,000 to buy, General Motors 49,000 to buy. I want to talk about GM for a second here because GM had the pop up earlier in the year and then earnings, and then it's pulled back here now. What are you thinking about GM and the setup here now, and Ford as well? Because I did buy Ford. We know I bought that a couple months ago here, right in this area. What are your thoughts here on GM and Ford technically?
Ford just doesn't seem to go anywhere. 1220 is the good support. GM, I've been thinking about putting a little bit of this in my portfolio here. I mean, I do say I have some protection with the dividend yield. And basically what it comes down to GM is the street doesn't believe the numbers. I mean, they don't think that they can sustain
sustainability.
Yeah, it's just, but I mean, they said that when this thing was at 30.31, and then we got a little Trumpness, and now they're saying at 30.35. I mean, you're looking at the dividend. If this thing could ever, get above $40 here, and we're looking at the old, they have the old GM price in here, but you can look the way this thing is traded from the IPO from 20 to 40, and we have just spent, I mean, it's got to get out of this $30 handle now, and just the way the earnings look and and I think Mr. Buffett's still in it here. I'm leaning to the long side here from a longer term perspective.
Okay, we've been asked lots of times about education and doing more educational events here, and we've talked about doing some stuff, and we've actually had a lot of people requesting to do something online. So Joel and I are still putting some stuff into the works, but I do want to just promote here Bright Trading, which is obviously where I trade from, is doing a 4-day online course this week. I'm going to post the link here in the chat, and if you're interested, you can email here. Actually, it's Rob Friesen, ROBRFR. I don't know if I should read his email online, but it's in the link here, so I'll tweet it out as well. Just talking about this 4-day online school. They're going to be talking a lot of different things. So a lot of times you hear a lot of technical stuff on our show. Bright Trading is a little bit more of a statistical arbitrage. So if you're interested in more like pricing anomalies, different things, hedge trading, pairs trading, starting looking into data mining, some very sophisticated strategies, they'll be teaching that this week online. The cost is $500. It's a one-time fee, but the one thing good with Bright Trading is they seem to have these about every couple times a year at at least. And if you pay once, you can go to all the other online courses, continue to go at no charge. So I've posted the link there in the chat. I will be teaching the stuff on high frequency trading. So I think it's Wednesday I'm teaching. I'll be teaching for 90 minutes on high frequency trading and more efficient order routing, also a little bit on algorithms there. But other, stuff that they're talking about hedge trading, pairs trading, looking, and like I said, data mining. So looking into specifics, on detailed data and finding statistical anomalies within the data and then trying to trade off it. They'll be talking about sentiment. They'll be talking about other stats, back testing your strategies, relative strength. They'll be talking about dividend capture, which, I've talked about on the show before, seasonality, macros. They're talking all of that stuff this week, and the psychology. Rob, the one thing good about Rob Friesen, who runs Bray Trading here now, is he's very good with the psychology of the trader and working with individual traders on trading psychology, because it's so much, and it's something that we don't focus a lot on the show, because psychology, can affect those decisions that you're making very significantly from your day-to-day trading.
Okay, I have one thing I want to. We haven't done any ratings today. I have one item I want to discuss. It's not an upgrade, but Goldman does see an increased likelihood that the iPhone 8 will include AR content, augmented reality, and they are increasing their. I believe they're increasing their price target to $150. But this is buzzing on my Twitter timeline this morning. They quote sensing is the word they use, an increased likelihood of AR in the iPhone 8.
Very, very interesting here. I was looking. I mean, the SPOOs are obviously trading up here, a little bit less than 0.25%. I noticed Apple had a weak close on Friday, but that's trading up 0.5% here. So it's interesting you mentioned that. I'm just looking at 133, folks. You know how I get stuck on my numbers. As I mentioned, 32.94. That was your high on Friday. Two highs from July of 20, back in July of 2015. So that's key to the upside. But I also just wanted to talk about some of the components, and this was mentioned in Barron's as well. And going in, going to add the AR, and the VR, whatever it is, to the phones, which I am not going to use. But there's three stocks they mentioned that could be big contributors to iPhone X, they were calling it. And one of those is Finisar. And this stock has had a nice run. 34.20, had a nice day on Friday. That is a daily. Looks like someone got their...
Oh, that's a big run.
Yeah, it looks like someone got their Barron's on Tuesday and instead of Friday.
Joel's conspiracy, Monday morning conspiracy theories.
All right, and then another stock that they talked about, and I know Chubbs has asked me about this one, LITE. This one, what a nice pop last week. They mentioned this is a potential. This stock has been a monster. And then another one that I don't think we've ever mentioned on the show here, IIVI. Look at this thing, man. Look at the march this has had. So this is based on speculation that iPhone X or 10 or whatever it is going to have a big VR and AR segment to it. These are stocks to keep an eye on. Dennis, any final words here for the traders and investors here?
Just looking here, this is one of those days we're up a little bit. It does look like it's going to be a little bit of a risk-on morning. Some of your financials are up here this morning. We know your telecommunications companies are going to be weak here. It looks like with AT&T, Verizon leading the way. But like we said, T-Mobile. So if you're looking for sectors of weakness, that one jumps out at you. Gold is weak here this morning. It's a risk-on day. Usually gold pulls back here, and you can see a lot of the gold miners trading down over 1% here this morning, along with gold, which is trading down 0.75%. So just looking at that, it looks like it's more of a risk-on open. So some of your defensive plays could be weak.
All right, Spencer, you want to wrap things up and preview? You have fun this morning, Spencer? You're smiling a lot for a Monday.
Yeah, well, I'm laughing about this tweet from Us Weekly that advised people to buy cheap index funds instead of individual stocks. It was a zing at, I don't even remember who anymore, but it was a zing. That's what I'm laughing at right now. Anyway, tomorrow's show we got two guests for you. Ross Cameron, he is from Warrior Trading. He's the owner of that site. It's a day trading education site. Also, he runs Fantasy Stock Traders. And then we'll be joined by Nick Shaheen as well. If you missed any part of today's show, including our interviews with Anmarie or Tommy, you can catch the whole thing again. Our podcast goes on iTunes, SoundCloud, and Stitcher. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. So that's it. Hope everyone had a good morning so far. Hope you have a good rest of your day, and we'll be back with you folks on Tuesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.